both Ralph and Velma talked a lot about what is clean tech. You know, Velma's definition is a lot broader. What is it? I think the other key phrase that Velma used that we'll hear a bit more about is the winning conditions for early adopters, and just how do we start creating those. Don Roberts is responsible for the bank's corporate lending, debt and equity financing, M&A advisory and trading activities across the clean tech and renewable energy sectors. And he's been really involved in the forest products industry, which has made a lot of news lately. During a sabbatical year in '09, Don led the Future Biopathways project on behalf of the Forest Products Association of Canada and explored in that industry really transformational strategies, and it's an industry that needed those. He developed a business plan for CIBC to build a banking franchise in the clean tech and renewable energy space. So this is a really crucial part of the stakeholder. So let's welcome Don Roberts.
Thanks very much, Evan. So are we unique? Do we have anything going for us that's special? Well, let's look at that. What are the unique advantages of in the clean energy game? And I would start by saying there's two types. Do we have any man-made advantages? And then we'll look on the natural endowments. On the man-made ones, I would say start with some design principles. What does capital want? A little TLC. We want transparency in terms of how do you navigate the policy structure and how do you execute. So transparency you need. You need longevity. We have to have a policy set that really matches the investment time horizon and gives us a stable environment. And lastly, ideally, you like certainty. Everyone wants that. So can you get deliverable, predictable revenues that support a reasonable rate of return? So we want TLC. Some places give it, others don't. I would argue that the best in the world at giving TLC is probably Germany and China right now. Among the worst, Spain, and dare I say, our friends to the south. Why? Because their policies are all over the map. You have to see what the next extension to a bill is going to be before you know whether a particular policy instrument's in place. Where are we? Well, it depends. It really depends. In some respects, if you look at Ontario, we would say we have got certainly the most generous feed-in tariffs in North America and arguably the best in the world. So you've got generosity. Do you have certainty? Oh, well, sometimes the devil's in the detail here, and we can get into that into the question and answer, but one of the key things is that we have desirable objectives. Everyone, after all, wants a wind turbine plant in their backyard, or certainly in their constituency. But how do we implement that? Do we actually do it with how we're implementing in Ontario with our domestic content targets? There's no problem with that, but it's how we execute it. And that's worthwhile exploring in the Q&A session. So we've got some design principles. Once we've got those in place, and the good thing is that, you know, as a well-educated country, a democracy, you know, we can probably get our act together there. But let's now get operational here. Look at the portfolio of policy tools that you've got. And I already emphasize portfolio, because when you look at the development of an industry or a company or a technology, it goes through various stages. And the tools that you want to use will vary. For example, will you use a feed-in tariff to encourage new technology? No. Why? Well, it gets down to the practicalities. If you want a feed-in tariff, that really what you're trying to encourage is project finance. Project finance will not accept, repeat, will not accept technology risk. It won't. If you want to get technology going, then you spearhead it with other policy tools. It may well be government grants. You know, nice to parachute a couple of angel investors if you can find them, but they're hard to come by. We have good programs in SDTC, Sustainable Development Technology Canada. I think is one of the world leaders in that area. But the point that I want to make is we want to, as we look at this sector, look at the clean technology, the new innovation, and then we want to roll it out. And there's different tools you use there. One of the things to note is what are our natural endowments here? And I would argue that we've got a lot, but the ones that are really unique, when you look at the investment, first of all, it's our bioenergy. Don't get me wrong, everywhere, and I mean everywhere on clean technology, the number one investment after efficiency, the number one investment is in wind. But after that, in most places it's solar, not in Canada. It's bioenergy. Not a big surprise, we've got a lot of trees and we've got a lot of farms. The second thing that's unique, I would argue, is our gas reserves, both conventional and non-conventional. See that as a transition fuel. The third unique thing, I would argue, is, again, our hydro. Regional based, but it's big. What do all those have in common? Something that's really very unique. I would argue it's base load capability, certainly on the electron side. One of the things we're going to find out is we get a lot of wind, we got a lot of solar. And other places are even better at it than us, but they're intermittent. We've got the base load. So how can we take advantage of that? How can we combine it with these intermittents? And you can do it. And we're seeing it right now, whether it's combining, it's in other jurisdictions, whether it's in the Middle East or the Southwest US right now, where we're taking sort of conventional and non-conventional natural gas and putting it with solar thermal electrical generation. Or it's taking biomass and putting it with wind. You need to combine them. We have to deal with the practical demands of the market. I would argue, if we look at how we're in the business of making money off of this and for understanding how this is going to permeate the whole economy. And so our focus, I can tell you, be very transparent. We're in three areas. It's energy efficiency. That's the low-hanging fruit. The second, it's waste to energy. And think of bioenergy, especially the biomass energy, as a special case of that. The third is water-related. Those are the three areas we're placing our bets. What's interesting in all three of those is that once you get the technologies down, I think we can export the technology. Because you know one of the sad truths is most of these clean energy technologies do not create many jobs. They don't. You need it higher. Okay, we'll get a happy compromise here. So if we're going to really create jobs, you have to start looking at the export market. We're too small. We're small. You got to export the jobs. That means be on the forefront in the technologies. Do we have a major weakness out there? Absolutely. What's unique about clean energy, clean technology, as opposed to general high tech, is the capital intensity, especially as you roll out technologies. And where are we weak here is providing debt to those early stages when you get into that third phase of development when you start rolling it out. This is a weakness in the capital markets. We've got a problem. Venture capital guys don't know project finance, and project finance guys don't accept technology risk. So something we can look at in our discussion. Lastly, I'm going to end with three comments and themes that are out there. One, good news. A clear downward trend in the cost of producing clean energy. Photovoltaic modules down 35 to 55% in the last 12 months. Second major theme, partnerships, putting together the different segments within clean energy. And the third, distributed power. This is one of the most democratizing things we're going to see. This is good news. Thanks very much.